FedEx reported quarterly financial results on September 18th, 2025, and I was looking forward to these figures because FedEx plays a critical role in the worldwide economy. So I'm going to share with you the details, what it means for investors, whether I think this stock is a buy, hold, or sell, and what the fair value of this business is. Let's jump right into it. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So FedEx reported revenue of $22.2 billion, which is up from $21.6 billion in the same quarter last year. That's better than I was expecting because FedEx handles a lot of shipments of goods and it depends on the flow of goods in the economy. Of course, tariffs and increasing trade barriers means people are purchasing fewer goods, businesses are ordering fewer goods, and goods are not moving around as much as they would be in otherwise situations without those trade barriers. So the fact that FedEx's business performed relatively well in this macroeconomic environment was solid for FedEx investors, to be sure. The operating profit margin increased to 5.3%, up from 5% in the same quarter last year. Remember, a few years ago, FedEx initiated a several billion-dollar cost-cutting initiative, and they're on schedule in improving and reducing costs to serve customers meaningfully. FedEx management team said their earnings growth underscores the success of their strategic initiatives as we are flexing our network and reducing our cost to serve while further enhancing our value proposition and customer experience. Consolidated operating results improved in the first quarter, reflecting strength in U.S. domestic package revenue and continued structural cost reduction. I was especially surprised to see the strength in U.S. package revenue because of the tariff impact I noted earlier, but there are also some seasonal factors or temporary factors that are working in play here. Right after these tariffs were announced, there was a huge stall in orders and imports and purchases, etc. And then, as the U.S. administration paused some of the tariffs, delayed some of the tariffs, and reduced the percentage of some of the tariffs, and there was deals with some of the countries, that created a rebound in some of those orders that were delayed right when those tariffs were announced. I expect going forward that there will be more headwinds to international trade as a result of those rising costs. Consumer budgets are already feeling pinched because of the inflation over the previous 5 years. And now, if they have to pay a higher price for many of the goods that are imported, they're going to pull back and they're not going to spend as much. And already we're seeing some major price increases. Walmart told investors a few weeks ago that they'll start increasing prices almost every week on the items that people are buying. Sony announced that the PlayStation 5 will be 10% higher or roughly 10% higher. Microsoft announced the Xbox console will be priced higher. Just some notable announcements from companies increasing prices as a result of the increase in tariffs. So if you recall from your basic economics class, which I teach at university, when the price goes up, demand goes down. So when the price of things goes up, people purchase fewer of those things. And if people are purchasing fewer things, that's not very good news for FedEx, which is in the business of moving those things around and moving things around, moving packages around. And more importantly for FedEx is the overnight segment or the speedy delivery segment, all of which will experience headwinds as a result of international trade barriers. The company went on to say that these factors were partially offset by higher wage and purchase transportation rates and the impact of evolving global trade environment on international export package demand and the expiration of the U.S. Postal Service agreement they had in place. Now, all that being said and all of the headwinds being accounted for, I've still felt that FedEx stock is undervalued because the price had decreased by so much in anticipation of these headwinds I talked about already. And management feels the same way, it seems, because they are accelerating their share repurchase program. They bought back $500 million worth of FedEx stock during the quarter, which were 2.2 million shares, and they told investors that they plan on continuing to buy back shares of FedEx stock throughout this year. And as of August 31st, they had $1.6 billion available in authorization to buy back those shares, and they had cash on hand of over $6 billion, so they've got plenty of cash available to repurchase those shares. I updated my intrinsic value per share calculation for FedEx stock, and the fair value of this stock, according to my calculation, is $270. But you can buy FedEx stock for $230. So I still see this business as being undervalued, even after accounting for all of the headwinds I highlighted. So given those factors, I upgraded FedEx stock to a buy today. I previously had the stock rated as a borderline buy, but today I upgraded it to a buy after reviewing the company's latest earnings results and updating my discounted cash flow valuation. I think this stock has headwinds and risks in the near term, to be sure, but I think the risk versus reward is worthwhile for long-term investors. Hey everyone, so many of you have been asking about my investing strategy, and I'm excited to announce that I've written a book that's available for sale now that describes my 6-step investing framework for evaluating stocks. I've added the link in the description below.